Exactly 1 year ago, we were faced with the failures of banks, starting with Silicon Valley Bank, and it led to this extreme sell-off. Take a look at this. Banks, ETFs, every type of investment that you can think of in that particular sector dropped off like a cliff. This resulted in a lot of sell-off. It resulted in a lot of fear. Now, if you've been on my channel before, you know I like to invest in the total stock market index. But when I have some extra money, and when I have a lot of money, I like to sometimes play around with some fear as well. See, when you play on fear, given that you have the opportunity to do so, it could actually stand to make you a lot of return as long as that investment is secure, is stable, and has a future trend. Like, for example, you wouldn't invest in Circuit City back in 2009 because that company was going straight to bankruptcy. Even though there was a lot of fear, you just wouldn't put your money into it because it was obvious the writing was on the wall. But when it comes down to the entire banking sector, after the crash of Silicon Valley Bank in March of 2023, yeah, I was thinking this is eventually going to come back. Banks aren't just going to go away, all of them, all together, forever. It's just not going to happen. So I jumped in to 4 different investments. And I made a promise to you guys, and this is what I said. Now, in full transparency, I did jump into this particular ETF on the first trading day since Silicon Valley Bank collapsed. My theory is on March 13th of 2024, this should be recovered. But if you're watching in the future, you probably already know if I was right or wrong. Did the banking investments recover and make me a good gain or not? Let's go through from the worst performer to the best performer. Very first one is my lowest performer, and that is ticker symbol KRE. Now, this is an ETF, which means that when you buy it, it invests in all kinds of different companies or stocks within that ETF. This one, KRE, invests in regional banks. Now, this one has been under a lot of pressure, and that's a result of some of the recent and also the past bank failures. When you invest in the regional banks of KRE, you're going to invest in things like Fifth Third Bank, Regions Bank, Webster Bank, and all those type of smaller type of banks that you probably saw around your local neighborhood. 100 shares is the quantity as you see right here. Now you're going to be like, wait a minute, it says 100.81959, and that's because this does have a dividend yield. So it pays a dividend, and I opted to do the dividend reinvestment program. So every time this particular ETF would pay a quarterly dividend, I'd reinvest it back in and buy more shares, which is why it's now 100.81959. But let's get to the exciting part. How did the regional bank ETF fare over the last year? Remember, we bought it at the bottom. We bought it when things weren't looking good. And, that takes a lot of guts because everybody is like, oh my gosh, this is not going well. Did you see how the graph's dropping off? Yikes. So it takes a lot of guts, and it's scary. When I buy into these things, especially that amount of money that I put in to buy 100 shares, it is very scary to do that. But let's take a look at what happens if you hold on tight and have a good theory and a good game plan for the future. Take a look. So the average price I paid was $41.32 per share. The last price, as of the recording of this video, is going for $48.95. That means my total return is $769.58, or an 18.47%. That is my worst performer. So it's only going to get better from here. But I got to say, 18.4, that's not the best, but it's also not the worst. Let's move on to the second one, and the second one was also an ETF, KBWB. This one is ran by Invesco, has a 3.31% dividend yield. The best part about this, beyond the cool dividend yield, is that it invests in more of your stronger banks. You're going to see things like Citigroup in that holding, stuff like JP Morgan. Those big banks are going to be what is in this particular ETF. Now, keep in mind, they also got hit, even though Silicon Valley Bank is technically a regional bank, smaller bank, whatever. The whole banking sector fell to its knees back in March of 2023. So I figured, why not invest in all of them? Let's do it. Let's have some fun with this. This one in particular, invested another 100 shares in the KBWB. Right now, racked up 100.79239 as of the recording of this video. My average price on that one was $41.31. But take a look at the last price. It is now going for $51.46. That represents a total of $1,023.41 in return, or 24.58%. That means my market value is $5,186. If you're newer to investing, if I sell this right now, all 100.79 shares that I own, if I sell all of that, I will have $5,186 in this case. My total cost was only $4,163. That's the amazing part about this. Now, I have a question for you before we move on to the top 2 performers. Did you invest in any of these banking ETFs? Did you invest into any banking single stocks? If so, drop them down below and let me know what your percentage gain is 1 year later. Because if you invested in March of 2023, theoretically, for pretty much anything, unless you invested into SVB, which would have been a very bad idea, but if you invested in some of the strong players, theoretically, you should be up on your money by at least 10, 15, 18% or more. The next one is my last ETF, and that is KBE. This is the Spider S&P Bank ETF. Now, what I'm going to do a little bit different for this one is I actually found a screenshot of my last video. And if you want to watch that video from a year ago, I'll link it down below as well. But let me take a screenshot from that. That was my Webull account back when I first purchased. You can see right here, I have a buy order for 100 shares at only $36.03 per share. The field time, 3/13/2023 at 10:06 a.m. So that's what it was looking like. Now, surprisingly, you can see I actually gained 1.97% since I purchased that, which was actually remarkable because, again, last year, things were not looking stable for the banking industry. But now let's take a look here today, side by side. Here is my current Webull account, and have a look at this beauty. Now I have a total of 26.51% return, or $956.26. My total cost, now see how the total cost is different. When I first bought it, it was $3,602.99. Now it's showing at $3,607. And that is because my total cost will go up when I reinvest dividends. And because I get paid dividends quarterly from these banking companies and these banking ETFs, it's going to increase that number. It's also going to increase the amount of shares that I own. But the beautiful thing is that's not my technical hard-earned money. The technical hard-earned money was at $3,602. But the beauty is right now, if I would sell all of my KBE shares, I would have a total of $4,563.65. I'm prying on the fear here, guys. That is what is so interesting about this. And before I tell you my big one, I got something really important to say here. It is hard. These things are rare. It's rare for things to go this far into fear and to strike perfectly. That's why they always say time in the market is so much better than trying to time the market, which means that if you just put your money in and you invest on a consistent basis, like we talk about on all the other videos when it comes down to financial independence, that you're going to win at every single time. This is just a rare unicorn. Not every day, and we don't want it to happen every day, where banks fail. This just happened to occur. And the story here is, back in 2009, I did not have a whole lot of money. I mean, we barely could afford anything, let alone investing. I wish, though, I could have afforded some things, because back in 2009, when the great financial crisis happened, I looked at all these stocks. And yes, I was looking at stocks because I've always been interested in investing. The problem was I had no money to invest. So I would look at these things. I'd say, wow, look at the price of some of these items. Imagine if I could buy some of those shares. Imagine if I could buy something. Like even an S&P 500 index fund like SPY, back in 2009 was going for, and this is February 2009, going for $73.93 per share. Now imagine back then doing that, buying as much as you could, having a lot of money to be able to do that. Right now, as of the recording of this video, SPY is trading for $515.97 per share. I mean, that's absolutely remarkable. And if you think about that, that's about a 597% increase to your original investment. And if you had a ton of money to blow into the stock market back in 2009, oh, you're sitting beautiful right now as a result of that. Now, that was hard times. People were getting laid off. Some people didn't have money like myself. But if you had the means to pry on that fear, you're looking great. And that's what this is all about here today. And that's why I also say in my other videos, it's so critical to minimize your overhead. And what I mean by that is your debt and your ball and chain. If you have a ton of debt that you don't need to have anymore, if you buy expensive cars or if you have big credit cards, pay that stuff off, because if you can eliminate the risk, when these bad times happen, you'll have more cash to be able to invest in the first place. That's the key. And that brings us to this most exciting one. Now, this one in particular is not actually an ETF. Now, I'm a big ETF fan. Very rarely do I invest in single stocks unless they shine like a golden goose to me. And guess what? Oh yeah, it happened. It was Charles Schwab Bank. I mean, we're talking ticker symbol SCHW. Here's the deal with this one. I love Schwab. I mean, it's a great investment brokerage account. It's a great banking. I mean, they do so much. But for some reason, when SVB collapsed last year, people were afraid of Schwab. They thought Schwab was going to collapse. Now, here's a big boy. Schwab, Fidelity, things like that. They thought one of those big ones is going to collapse, and so much so that it brought down the price significantly from where it was. So I'm like, you know what? I'm going to do it. I'm going to buy some shares of this particular stock. And I bought a significant amount because I started buying a few. It kept going down. I'm like, no way. I'm going to keep buying as long as it keeps going down, because there's no way something like this is going to fail. And that was my theory, backed by data, backed by the financial reports, and here is the results. I bought a total of 160 shares. With the dividends reinvested, that's 160.61486. My average price on this particular one was $48.74 per share. It is currently going for a total of $67.16. Guess what that means? I have a total of $2,957.93, or a 37.78% return. When's the last time your boss gave you a 37% raise? If they did, go give them a hug. But also, it's rare. And it's rare because investing can truly be a significant thing if you give it time and you give it strong theory. Take a look at my market value. This is sitting at a beautiful $10,786. And you may say, well, are you going to sell this? I have not determined my strategy on selling yet. I'm holding on for now, but I may or may not do that at any time, which is why I say none of this on any of these videos is advice to you to buy, hold, or sell anything, because you really got to come up with your own theory, your own strategy. I would recommend using something like Seeking Alpha. It's something that I really dig into. I go in behind the scenes. So I do have the pro account because I really dig in to look at the financial reports, to look at the data. And if you want that as well, they are offering you a deal. Click the link in the description below to check it out. But when it comes down to Schwab, it also pays a very handsome dividend at 25 cents per share. And they've been doing that every single quarter, which is every 3 months. And they've been doing that ever since I purchased this. Now, if you think about this and we do a quick calculation, if you take 160 shares times 25 cents per share, that is $40 per quarter that's automatically getting reinvested back into this particular stock, which is again why I have 160.61486. Power of dividend investing, it's really kind of cool. So those are my 4 banking results from that video 1 year ago. Let me know how you did in the comments below. Check out this video next, and we'll see you on the next video.